Folks, if you don't know, there is a little company that makes a couple of cars called Tesla, I think it is. Tesla out of Austin, Texas, the great state of Austin, Texas. Don't mind the flag. It only says 1 star, but I think the state is a lot nicer than that. We're going to talk about the stock in the company and all that it has to do. I'm joined by Randy Kirk, who follows the stock obsessively, I would argue. And
Tesla is a 1-star steak.
They advertise it everywhere. It's kind of weird. I mean, everywhere you go, they're like, hey, by the way, don't forget, just like our solar system, 1 star. It's all you get. So, Randy, the stock does things. Why does it move so irrationally? And is now a good time for people to invest, in your non-financial advice opinion?
Yes. Okay. So it's pretty interesting that you would bring up this topic today, because this morning I was thinking about the absolute, this is one of the most volatile stocks on the market. People trade it on the options market because it's so volatile, and then because they trade it in the options, it makes it even more volatile. And if you don't understand all that, this is not the format for when we're going to talk about all the comings and goings of the options market and how it affects the daily stock situation. But I thought about, why is it as volatile as it is? And I think what's going on is that it's the number of products, and not only the product, not only do they have a bunch of different categories, but all those categories are moving. They're all disruptive. They are all introducing new ideas all the time. They're all exciting. And any one of them could end up being the largest company in the world. So you could have energy becoming the largest company in the world. You can have the semi-truck becoming the largest company in the world. You can have the basic automobile becoming you could have robotaxi becoming the largest company in the world. You could have Dojo as a service eventually become the largest company in the world. So you got just those moving parts alone would be enough that would create a tremendous amount of uncertainty from day to day about when or if Tesla itself becomes bigger than Apple, bigger than NVIDIA, et cetera. And so with all that uncertainty, you get a lot of volatility.
And I get it. The thing is, I'm going to name a scenario and you tell me, could the stock go up or down, either one, based on this information? You ready? Bad earnings. Could the stock go up or down?
Bad earnings, if it misses,
it could go down.
Bad earnings, if it's bad earnings, but that was what was expected, then it
could go flat. Yeah. Good earnings, could the stock go down?
Same thing. What was expected? It's all commonly on your earnings.
It can go above expectations and still move in either direction. What about no news? A day with just no news at all. Could the stock go up or down?
So there can be situations where, again, options trading, the macro. Remember, the macro is a huge impact on the valuation of any stock. So if all of a sudden you have a day when the Dow is up 500 and the Nasdaq's up 350 and the S&P is up 100, and all of that's going on, well, then Tesla is lifted along with the rest of the boats, or the opposite, of course, would also be true. Yeah.
I've seen it happen in every direction. People sometimes make the mistake of asking me for short-term stock predictions when I remind them that I am not a wizard. I'm not a genie. And I can't trade as fast or as smart as the algorithms that are run by teams of PhD level engineers. These guys' job is to beat the market by 100% on a given day.
Brian, I will disagree with you. You probably watch a couple of these guys that actually day trade, on X, and they report their trades, and so you can see how they're doing. And I did it for a year. You can beat the algo, okay, but it is a full-time job. I multiplied my initial starting number by 33 times in a single year. Now, I only started with a small number, which is part of the secret of how I did it. I started with only $2,500. So I did 33 times that. So it's $68,000 at the end of the year. but it was a full-time job to do
So
that.
I'm gonna stop you right there because you got lucky is what you got.
Oh, no.
I know just as many stories of people who went full time and lost everything because their analysis wasn't necessarily worse than yours. It was just different. And if that was a thing, that would be just, you remember the E-Trade cafes that we had, the Ameritrade lounge you could go sit in and gamble all day. I mean, invest. Day trading is inherently risky. I know people, I've met people and have had conversations at length with people who write these algorithms, whose job it is to trade all day via complex computers, and they don't just do it on one market, they do it on each market all day, every day that markets are open. And their objective is not to, their objective is to cover all of their expenses plus a profit.
Right.
And they are able to do that, but it requires it requires outlandish amounts of skill. And the problem with any predictive algorithm is as soon as it works, it doesn't. Because as soon as you exploit it, it changes the market. It's the Fermi's algorithm. Observing it changes the outcome.
You are 100% right. The strategy is a big part of the game. If you watch Squawk, I don't know if you watch him on X, but his strategy is very similar to the strategy I used, and that is if you've got a profit, take it. And this was a strategy that worked really, really well for me that entire year. I've watched Squawk, and it works for him very, very well. So you can get in and out twice in a single day, sometimes three times.
If I'd have taken profit on Tesla, I would have gotten out at 400 pre-split. And I would have not, when people complain, this senator, this congressman is insider trading, I look at their trade history and say, boy, there's some real bonehead mistakes in there. If they could predict the future, they're doing a terrible job. There are 535 members of the House and Senate, and only about 24 of them outperform the market. If they have inside information, it is useless to them unless their objective is to donate money via the stock market to other traders. They say, well, no one can get those kinds of returns. I've gotten better returns by just investing in one company at the right time. Yeah. Yes, there was a degree of luck involved, but anyone who was looking at Tesla in 2019 and didn't see what was coming must have had their head so far up in the sand, Randy, we're talking ostriches here, that it wouldn't have mattered. And, I get it. It's popular to make fun of whichever politician we don't like today. But when you're analysis driven, which I am, you gotta stick to the analysis. You've got to look at the results that they've achieved. And some of the stock trades of those members of the House and Senate are boneheaded. Are just like you sold. You sold this at its bottom to buy this at its top. Terrible. Yeah. That's bad.
Well, so you said in the beginning, this is not financial advice, but I've been doing this since I was 18, and that was in a previous century.
It was. Yeah, that was before the turn of the century by a lot.
By a lot. And so, and what I found is that a lot of people, they're all fundamental. And that's great. I was walking through a grocery store one time and I saw this beautiful bottle of water. And I said, man, that bottle, that's going to sell like crazy just based on the beauty of the bottle. I went home and I looked up to see who this maker was. And they did extremely well. So you can sometimes just go with the fundamentals and go, that is a great product. I use it. I know other people use it. Costco is a great example. I would have invested in Costco 25 years ago. Apple is a great example. We all use it. So it's a great thing to it. So that's the foundational, fundamental principle of it. Are they making a great product at a great price, as Elon Musk talks about? Then you've got their financial fundamentals. You got to know about those too. So you can't just go off of the idea of the product. You've got to, okay, how are they running the business? Are they making money doing this? And can they make money in the future doing this? And then now they get to the technical. And I'm not a technical person at all. When I say that, I mean it. I don't go into all these, 5-week moving averages and 60, 6-month moving averages and all that kind of stuff. But I do pay attention to the fact that there's some strategy with regard to when stocks peak and when they bottom, and you can use those strategies as part of what you're doing. And then, as we talked about a minute ago, you got to get into the overall economy. You got to know what the economy is doing and where it's headed and where is the overall stock market. So you have all of those moving parts that are important to, if you're going to be a trader, you really have to pay attention to all, what did I just have, 7, 6 of those things?
Never forget. No, wait. Always. No, don't forget. No, wait. So my buddy Gort on X publishes the lines of Gort, where he does parallel lines on the Tesla chart. And for years I asked him what it means, and he once slipped and confessed, they're just lines. They don't actually mean anything, but they are the lines of Gort. They are as good as anyone else's lines. I am confident. Gort, you've been in my heart this week. I'm so sorry for your loss. You mean a lot to the community, and we miss you. So the strategy I have, and I want to run it by you because I think it's a good strategy. Again, not financial advice, but this is what I am doing. I wish to invest in an AI company and a robotics company, but the company or companies need to be real companies with real products and real applications. Isn't that just Tesla? Because that's my AI play. That is my robotics play. That is I wouldn't get into grid scale energy, but if I did, this is my play.
So what did you just do? You did something I forgot. I didn't put it in the list. You did arbitrage. Knowledge arbitrage is the number one way. So you talked about those insider traders, those senators and whatever that have the inside trade. Well, they've got knowledge arbitrage. Theoretically, if the knowledge is good, if the information they're getting is actually valid and it's actually going to impact the stock, then they have information that you and I don't have, and they can use that to trade. Well, knowledge arbitrage is the very best way to make money in the stock market. And that knowledge arbitrage can be what I just talked about. Knowledge about where is the economy going? Where's the stock market going? Where's the company going in terms of its economics, its underlying economics? What is the principal owner of the company like? What is his capabilities like? What has he done in the past? All of that knowledge arbitrage, which you just described very well, these products right now, the rest of the stock market doesn't get it. They don't get that Elon Musk's company is eventually going to be the leader in AI, in what we call embodied AI, in products that actually use AI to make them what they are and make bajillions of dollars doing it. That is a knowledge arbitrage. Fantastic way to play the market.
Look at that. I've done it again. I've stumbled onto my accidental genius. And by the way, to the folks in the comments who sometimes mistake me for a genius, I have been tested. I am not a genius. I do know my score, and it is high enough that that I am pleased, and high enough that I know not to share it, because at that point, but I am no genius. I do know that.
I thought only your wife really knew your score.
No, I don't think I've ever actually told her.
I didn't mean that anyway.
But she, yeah, indeed. But she has a hunch that I'm reasonably sharp, except around the edges where I'm awfully squishy. Guys, in the comments, what do we miss? What do we misunderstand? What is your strategy? What is your genius idea? I'd love to hear it. Everybody else, stay tuned, stay juicy, and I cannot wait to hear from you, clever robots, when the fundamentals outweigh the hype.